flow to find the buyer or the seller getting jammed. So when I see a peak forming or a trough forming in an area, I'm obviously zooming out of that area to get macro context. I zoom out to see if the black line, for example, is lower on a macro scale here or higher, and I'm suddenly recognized and referencing an idea here that perhaps the black line isn't as discounted as the short term suggests. So in other words, I pause my selling of treasuries to allow for that discount, or in this case, the discount in the black line, which is a premium on bonds, to actually form properly. I start looking for the possibility of a buy trade stepping into that market. So when I zoom into the charts here, of course, we're obviously seeing a big discount coming into the place here on the blue line and the purple line, and then it flattens out here. So if I'm going to take the trade, now's the time to deal. I also recognize something else. I recognize that it's a short-term scalp because the macro is not in favor of this rebalance. So if I'm going to take it, it's going to be a short-term sell scalp, and I recognize that that's what I'm looking for. In other words, I'm not going to pay, I'm not going to cross, I'm not going to chase. I'm simply taking a scalp against a lean as soon as I see it. That's it. And obviously, if I'm a bond trader, my job is to find that lean. My job is to try and make sure I'm very passive on that lean, and I simply exit the trade when I see the first signs of the pressure reversing back against me into those trade narratives. You can see what happens. The price goes up by a tick. You can see the price goes up by a tick and then sells off beautifully, far better than you perhaps even had thought it was going to do in the first place. But that's okay because you're in it anyway. Okay, it's a nice trade. So we go back again and we start looking all over again. We're looking in the very short term and we say, is that a short-term trade there? Well, it certainly looks like the value is exploding on that bit of business on the right-hand edge there. So you say, right, I'm going again, guys. I am going again. Let's take this trade on. It's time to get short again in that narrative. And you start looking. You start looking for the buyers getting jammed. You start looking for the leans. You start looking for the sell order book following in behind it. And you say, right, it's time to do business. And you start selling into that candle. And what happened? Well, the next candle dropped and the next candle dropped. You made some money again. You made a nice scratch trade. Easy money stops to break even. And then the selling did pour in behind the trade as expected. So you can see that it is possible to see these on the right-hand edge so long as you do the work. What work are we talking about? Zooming in and zooming out. It's kind of crazy how simple that idea is, but it's also incredibly powerful. Something that everybody can achieve simply by not getting locked into this chart, but by taking a little step back to recognize where you are on the bigger picture for the last few hours. The idea of selling in these areas in terms of bonds is obviously a scalp trade on a macro scale basis. But it's also the 1 o'clock trades. It's also the important trades that we want to try and get involved in because this is the start of the US session. So we don't want to miss these opportunities on the short term. And obviously as we go forward, we start looking again, and you can see in the very short term, here's another possible trade here. You can see the black line is going down, the purple line is going up, the red line is going up, the blue line is hardly moving. So you say to yourself, I'm going to have a look at that. I'm going to have a look, whether you like it enough or not, that's a different question. I'm going to have a look at it, sell trade on bonds. And then obviously from that point onwards, you can start to see this change taking place up here. Now that lines up with the macro now, doesn't it? That change lines up with the macro. But when we look at that, you might say, but it lined up with the macro before that. It lined up with the macro there. You all agree with that? It lined up 3 candles previous. And it did line up 3 candles previous. But by looking at the bigger picture, what are you starting to recognize? What are you starting to recognize by looking at that picture right there? It's all technical, guys, really, when you think about it. It's all the technical side of the stuff that you've got to make sure you remember about. What do you recognize by looking at that picture there? Since nobody knows, I'll tell you. They were all failed auctions. And the value that we were getting on the black line was getting less and less and less, not more and more and more. I'm surprised nobody knew that. You need to know this, otherwise you shouldn't be trying to trade this, guys. So the value when we saw that selling coming in, for example, over here, which was at roughly the same price, the red line and the purple line were away down here. The red line and the purple line are away up here on this trade. We've lost the value. So when I look at that and I see 2 failed auctions, 3 failed auctions, I'm thinking to myself, we really need to regain some of this value because I'm not getting the kind of outcomes that I would expect to get from this narrative. So when I look at that and I think to myself, okay, let's take the price to the previous level. We already know where the previous level is. There it is, there it's visible. So we re-establish the value that we've been missing. We re-establish the value and we can execute against that narrative. It doesn't mean we haven't taken previous trades potentially. It just means we're recognizing that the value is getting less. Why did nobody know that? What is it you're missing in your trading that you can't see these things? Is it I'm terrible at describing it? Do you just simply not know? Or are you simply not looking at the markets from that critical eye yet? Or are you still got a lot of work to do? So there it is. There's your buy trade on bonds right there. That's your buy trade candle. It's into a previous level, which we now know about because we've looked at it on a longer term chart. It's re-established enough value, and as I said before in the classroom this morning, I did give a suggestion that you should be able to look at this and draw a line between the black line and the red line to see how much value you've got on it, measure it. So long as you don't move the charts to the side, that measure is valid. Well, when I was trying to do business here, the difference between the red line and the black line was a lot less during that period, but it was still looking at that side of it. It was still that positive side of it. And obviously, by the time we got into the top edge here, the value is getting a lot better. It's not quite as good as it was, but it's getting better. It's getting better. The value is starting to get better into that retest. And that's what I'm trying to do. As a trader, I want to get the best value possible. I've mentioned many times to guys in the classroom, in terms of trading, I've mentioned many times over that one of the challenges we have as traders is, of course, the idea that in the retail space, you don't have the same access to the same kind of computing tools that we have because there's millions, hundreds of millions of dollars, if I'm being perfectly honest, spent on the resources that make us small but incredible edges. And obviously what we do is we value everything. Everything gets a value and everything therefore gets an asset allocation attached to that value. So when we get a huge value, we get a huge asset allocation allowed to be put into that huge value. It's like arbitrage. If I've got an arbitrage for, say, 10 points, they'll give me basically unlimited resources to get that arbitrage trade of 10 points. If I've got an arbitrage trade of 1 point, I won't get unlimited resources, but I'll get, because obviously the more resources I put on a 1 point arbitrage, it's just going to wipe the arbitrage off the trade, isn't it? So it's not going to be that relevant. So I can only get maybe a few trades on. So this is the same. The more value we get, the more resource we can apply to this. That is a buy trade on bonds. So when we look at that buy trade on bonds, we start looking at the price areas, we start looking at the price levels, we start looking at the volumes, we start asking the question of our order book. Do we have a trade signal at that point in the charts at approximately 13:30 to the dot? And at 13:30 to the dot, what did we see, guys? I'll tell you what we saw. I'll tell you exactly what we saw. I wonder if you can see it. I'm going to see if you guys are right on the numbers here. See if you can actually spot the trade. Because think about whether you would be doing this trade. Think about it whether you would be able to spot this trade in real time. Do you see the trade? Well, you can see some heavy selling deltas coming in. You can start to see the book is bidding up. That's us. Obviously, we're starting to bid the book. Starting to bid the book. Let's see what happens. Next candle. Does anybody see the trade? Does anybody see our trade? Does anybody see it? Well, there it is. That's called a benchmark, guys. That trade there is called a benchmark. That trade is called your reverse engineering Hall of Fame entry. You take a screenshot of it. You learn it. You go back over it again. You go back over every single candle leading up to that trade. And you benchmark it. Do you realize what it takes to be a great trader, guys? A hell of a lot more effort than most of you are willing to put in. So you've got to be having that commitment to step up into these trades and really see what it is we're talking about. I had this conversation with one of my daughter's friends who is talking about becoming an artist. And obviously I told her a few home truths about becoming an artist. I says it's not good enough to just be good. It's got to be incredibly good, because there's a lot of good people who can draw and paint and do all of these things. You've got to be incredibly good. And that means you've got to draw. So I suggested that she get some drawings and some artwork. And she literally looks at literally every single pixel, Jack. You might think that's obsessive. You might think that's ridiculous. But I've told her to look at literally every single pixel, break up a picture into sections, and look at every single bit of shading, every single bit of brush strokes, every single bit of flick of oil, to try and understand the impact that that flick of oil had and the impact of the painting itself. When I was learning to paint in oils and acrylics, that's exactly what I did. I got a few paintings, just cheap oil paintings, and I literally got oils and acrylics and I painted over the painting. They were just cheap throwaways, right? They were just random unknown artists. And I got paintings, I got paint, and I painted on top of the paintings. Why did I do that? Well, because I wanted to understand what it was they were trying to achieve by that particular brushstroke. It would take a redo and a redo and another redo and another redo until I finally had totally, completely demolished the guy's painting. But that's okay. I'd learned about the technique. I'd learned about the technique. I'd learned how to make that trade my own. And it's interesting because Kim's pal on the reverse engineering talks about this particular subject. Talks about this actual subject, and he talks about it in the way of a lot of creative people think that's cheating. Remember that, Kim? A lot of creative people think that that's cheating because you're basically copying somebody else, and it's not cheating. It's about getting into the mindset of that creativity, getting into the idea of what that creativity looks like and feels like, so that you can adapt it for yourself. You're not trying to pass off his painting as your own. You're just trying to learn. You're trying to learn in the footsteps of somebody that knows better how to make that trade work, how to make that painting work. And that's the kind of steps that I take on everything I do. If I'm learning to paint, if I'm learning to do anything, that's the kind of steps I want to achieve. When I was playing football, I watched countless videos over and over and over of Mike Singletary. You might remember Mike Singletary. I watched countless videos of the Chicago Bears defense, the 46 defense. And I looked at the individual players on every single step that they took. And when I coached, I got the players to look at every single step they took, or the very first step they took off the line of scrimmage. We broke down the first step they made with their foot and with their arms. Every single step. And it's the same for trading, guys. You don't realize that just looking at this and just... Do you know what I'm trying to say? Jack gets it. But do you know what I'm trying to say? To really get into this reverse engineering, you don't just look at it and go, yeah, that's a great trade, and you move on. And you move on. No! You look at it, you look at it, you look at it, you look at it, you go back over it, you look at it again in 5 minutes' time, you look at it again in an hour's time, you take a screenshot, you look at the lines, you look at the lines before, you look at the lines apart, you look at the size of volumes, you look at the book volumes. And you keep looking and you keep looking until you don't take the sell in that candle. You don't take the sell in that candle. You only take the sell in that candle. I'm talking about the black line sell. You only take the bottom edge bond on the candle that you end up with. So that instead of getting a buy trade here and getting stopped out, as might have been the case, or the buy trade here and getting stopped out, as might have been the case, no, you didn't get a buy trade here and get stopped out, but the black line was going up and the blue line was going down and the red line was going down. Why was it not a buy trade? Exactly, that's the point. Why wasn't it a buy trade? What were you waiting for? What is it you need before it becomes a real buy trade? Then you got the lean, you got the Baltics, you got everything you wanted, and then you got your buy trade. And you go, oh, that was pretty simple. If I just waited for the right things to appear, if I waited for the right things to appear, and then I got my deal, what happened next? The bond left the bottom edge and then rallied off what was a pretty impressive little bottom edge trade. Now, it didn't do great at first, but you can see the book value came in massively behind us. And then there was another little lean in here that you could have taken, and then boom, straight up. Straight up, why don't you? Look at that trade, guys. Look at that trade. Straight off the bottom tick price at 15s, boom, 500 bucks. To achieve greatness in this field, guys, you've got to be amongst the best, and that means you've got to be dissecting these charts until you don't need to dissect lots of charts. It's not about dissecting lots of charts. It's about dissecting charts in the necessary amount of detail and putting the effort into the really good focused stuff and avoiding the noise in the background, avoiding the stuff in the background that doesn't give you any money, just gives you a lot of effort, a lot of things. That is a great trade. That is a great trade. Not a good trade, but what makes it a great trade? Benchmark it. Benchmark it so you can now compare every trade to that trade. The size of the lots, the size of the order book coming in behind, not just a blue candle, the size of the blue candle, the fact that there was 2 buy order book reversals prior to that candle even forming in the first place. Benchmark it. Every single moving detail of that trade, you benchmark, you log, and then you say, right, that was a brilliant trade. Let's see if any of those other trades set up the rest of the day. Let's see what happens to those trades against that benchmark. How consistent are those trades? Where do these trades normally are found? Are they normally found in this area here? Are they normally found at this time of the day? Are they normally found blah, 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 blah? And you start asking the right questions in a focused manner. And obviously the takeaway obviously for that sell trade on the black line was incredible. And as we start to look at the big picture, we go back out into the big picture. This was also visible, so therefore that's part of your benchmark, is that that great trade was also visible on a chart that goes back over the last 14 hours. So you're now looking at that for a possible buy trade, a macro buy trade. That might be your only trade of the day, Jack. It might be your only trade of the day, Paul, but who gives a damn if it is? The trade itself was a beauty. The trade itself was worth a lot of money. If that was your only buy trade of the day and you took it from 179.15 to 180.15s, it's still $1,000 in your bank account based on the best benchmark trade of the day. It's crazy good. Not just good, crazy good. And obviously when we start zooming in, there was another possible benchmark reversal. As we zoom in, you can see almost as good a benchmark reversal forming in here when the red line completely separates from the purple line up here. We can start to recognize that there is some serious possibilities of this trade here. Now you look at the background and you notice that the blue line has only just touched the blue line there, but the red line is now completely the opposite side to this. And you say, you know what, if I could benchmark that black line, I wonder if I could find a trade up here. If I could benchmark that. So where would that trade show up? Well, obviously when it breaks the first level here, because that was part of our benchmark. That was part of our benchmark, wasn't it? So when we break the previous level here, that was going to be part of our previous benchmark. So we start thinking to ourselves, right, I can start looking at 1434, for a possible trade. 1434, I can start looking for a possible trade. What was part of that benchmark, guys? What was part of our benchmark? Well, part of our benchmark was the book was going offered for at least 2 candles. That was part of our benchmark. Whether that's something we can lean against or not doesn't make any difference. It was part of our benchmark. What else were we looking for? The block trade was 50 contracts, so we want to find 50 contracts or more on a block trade. What color must the block trade be? It must be green. So if I want to try and find to see whether the benchmark exists in that area, let's take a look and see. Well, we can see that there's a couple of sell candles coming in here in terms of book selling. That's good news. And obviously, as we go to the sideline, I can see that there's no block trades appearing yet. That's bad news. So let's carry on going. Let's see if we can find the deal. So we're seeing some selling coming in on a green candle. That's good news. I don't see any block trades. That's bad news. I see some selling candles coming in again. That's 2 candles in a row where the book has actually gone on offered on upticks. That's great news. And then I see 3 candles that the book is now selling aggressively on upticks. It's not just selling, it's selling aggressively on upticks. What else? I get a 74 contract block trade lean. I now have a agreeable, exact replica of the benchmark trade, haven't I? Yes? Have I got a benchmark trade? Yes or no, guys? Is that an exact replica of the benchmark buy we had earlier? We had 2 blue candles on downticks. We then saw a downtick candle that had a 50 lot sell getting jammed. And then we had a very large buy block getting traded at exactly the same time as the big jam trade took place. This is a benchmark, exact benchmark for a sell. Exact benchmark. No difference. Nothing. 24 contracts more, but it's above 50. It's above the benchmark. And what happens next? What happens next? Well, that's what happened next to that bond trade. The price went right off the high print, went right off the high print here at 80.15s, dropped down to the low print at 79.27. You just made yourself another $500 on your next benchmark. Your next benchmark. Now that's pretty important, isn't it? Once we can understand that that benchmark is completely visible and it's tradable, all of a sudden, the trade is absolutely annihilated on the short side. And when we see that annihilation, and it's been benchmarked for especially because it's our benchmark that we're using, suddenly say, well, I just have to wait for that trade. It seems dead obvious. I just have to wait for that trade to show up to lean against. And then I sit back and I wait for another one. You might only have had 2 trades. You might feel as if you've been a little bit shortchanged because there hasn't been a lot more trade opportunities. That's up to you how tight your benchmark becomes. You might have looked at the bottom edge here and says, my God, I'm starting to see 2 blue candles on downticks. I want to be a buyer somewhere in here. And you start saying, well, if I'm going to buy it, let's see if I can find a benchmark sell on the black line. Well, there it is. That's potentially the benchmark sell on the black line, isn't it? Right there. So this obviously had a different narrative because obviously you're looking at that from the order book narrative. You've got 2 down candles selling. You've got 2 book buying candles appearing, and you say, well, that's part of my benchmark. And then you get huge block leans. That's another part of my benchmark. And you say, right, inside of that benchmark world, have I got any reason why those guys are doing that trade? Not looking at doing the trade and then finding the guys doing it. Is there any reason why they're doing that trade? Because they seem to be buying an awful lot of bonds here. And you suddenly look at this part of the chart and say, damn it, if I reverse the benchmark process from the order flow point of view, I can still see the damn trade. There it is, right there. There it is, right there. You can see the book going bullish, 2 candles, the price dropping 2 candles, and we can see the price getting jammed. 2 candles later, the price goes straight up. Benchmarking from this side going in is just as valid as benchmarking from this side going in is just as valid as benchmarking from this side going out. We can benchmark from the chart here to the order flow chart, or we can benchmark from the order flow back to the value chart. It doesn't make any difference because you're still needing both of those pieces to do the trade. Now, one of the things that's actually better about doing it from the order flow back to the value chart is because the order flow is somebody actually physically doing something right now. The downside is you've got to be rapid in your analysis on that chart here, the value chart. You've got to be rapid because the trade is now taking place. If you were watching the value chart, you can see the trade starting to become a possibility. And then you can watch the order flow as it forms and then execute against the order flow. Then, of course, you're already on the order flow chart. You're already on your execution charts. You're ready to press the button. You're ready to take the trade on. So you can approach it from both angles, can't you? You can approach it from both angles, whichever angle suits, and whatever angle suits us, you can chop and change it for all I care. It makes no difference. But it's a good way to think about the markets, guys, is how good is your benchmarking skills? If your benchmarking skills are great, I can almost guarantee you're going to be making a lot of money, so assuming your execution's just as good as your benchmarking is. Incredibly powerful stuff, guys. You do have to wait for them, Reeve, because we've talked about the fact that pretty much every candle can give you a trade if you wanted it to. If you had your benchmark was so loose, and a lot of scalpers, the benchmark is loose. They still have an edge, but they have an edge that is so loose that they can literally trade on every single candle they see based on whatever it is they're benchmarking against. And when the value becomes so good, they'll just add bigger size, right?